So inward expansion, and the name in some ways, like what does it actually represent? They know that there's talent in South Africa. They might have a team in the Philippines, but they want something different.
Why South Africa? What is the appeal for South Africa? Welcome back to Founder Value Unlocked. I'm your host, Ross Marshall. And today we're going to be tackling a common frustration that global companies have when they're trying to build teams in South Africa. We'll be expanding inwardly on the unique solution that Finovate has provided for their global clients. And this is a system that has significantly alleviated a lot of stresses and a lot of headaches for these companies that want a presence in South Africa. My guest once again today is Francois O'Kennedy, the MD of Finovate and the person who built this solution that is currently changing how global companies approach this very problem. So Francois, thank you once again for being here and welcome back to the podcast.
It's a pleasure spending time with you, Ross.
Great. So let's begin with the very basics. Again, I'm playing and I'm representing the confused but curious listener. So please, in simple terms, tell me about Finovate's inward expansion solution and who is this solution for?
Yes. So inward expansion, and the name in some ways, like what does it actually represent? So what we are doing is we are primarily solving a problem that international companies that aren't listed, that are privately owned, that understand there's already a massive advantage of building teams in South Africa. They know about the cost arbitrage. They realize that actually there's amazing talent in South Africa. They've probably got people that is in their company, possibly in London, in New York, working for them, that's from South Africa. But they don't want to stop there. They want to build a team in South Africa of outstanding resources, people that can work from South Africa for their company internationally, and they want to grow that team. They don't know what the options are. They don't necessarily understand the landscape, the problems, and the red tape. And our inward expansion solution gives them effectively a business in a box, plus a ongoing retainer that helps solve their headaches as they keep growing this team in South Africa.
That's great. Thank you for dumbing it down for me because I really needed that. So, okay, let's talk about the actual problem because now you guys are addressing a problem. And what crisis or what dilemmas do you guys find businesses in? As soon as they come to you, what are they currently experiencing in their life?
Yeah, almost taking them through like, what are their current state?
Yeah.
So I'm going to give two examples. One is they know, like I mentioned, they already know that there's talent in South Africa, and they've decided that it is probably a strategic move for them to build a team in South Africa. Maybe they've already got a team in India. They might have a team in the Philippines, but they want something different. They want a team that's really good at problem solving, where there is still cost arbitrage, but a team that can also be client facing. And so they need to pull the trigger on this, but it's not just a short solution. They are either going to spend a lot of money upfront with advisors, consultants, trying to give them something on paper that could work, but what about the implementation? And this is where we see a lot of problems arising. You could get transfer pricing specialists, you could get an accounting firm that can help you with setting up the entity, but what about banking? What about HR related matters? What about legal matters? What about maybe like insurance related matters? What about the option of recruitment? So there are all these different elements that need to be solved, and they probably don't want to go broad and just have 10 to 15 different perspectives on this matter. They want to have one partner that they can trust, that can work through, that ultimately reduces a lot of the overheads and the time that gets spent just to assess if this is a great opportunity. That's the first one. It's quite early on. The second type of client that we see and find would be a client that already has a team based in South Africa, but they effectively did it DIY. It might be through an existing employer of record, which means these employees aren't directly under their roof. It might be within an employer of record, and they realize that at scale, potentially now the team have grown to 5 to 10 employees, the solution doesn't make sense. They want to go and cross the chasm into going from an EOR or maybe just having contractors to a more permanent home for their staff in South Africa. A culture fit, something that resonates with the way they've built the structure in the UK, in the US, the team, the dynamics, their contracts. They want that ownership, and they want to understand that whoever these employees are, there's a growth path for them, a long-term strategic growth path. And that is where we can come in.
I see. So let's get to the root of this, actually. So these are for global companies that want to expand into South Africa, but why South Africa? What is the appeal for South Africa?
Yes.
Yeah, that's the question.
So, I mean, currently what we're seeing is for a UK-based company, I'll just use 2 examples, UK and US. So on the UK side, there's a cultural alignment when it comes to South Africa. And we can see that with regards to sport that gets played. There's also already a lot of cross-pollination. We've got more than 500,000 South Africans that's currently living in the UK. So you probably already exposed to a lot of South Africans if you're based in London, and you could effectively see that if you watch a rugby game at Twickenham, the amount of South African supporters if the Springboks are playing there. And so there's something that you can probably resonate with on a cultural level. Time zone, it's either with daylight saving 2 hours or 1 hour delay difference between South Africa and the UK. And thirdly, I think there's more than 3, but the third one I want to hammer on is the quality of talent that you're getting in South Africa. Time and time again, we've seen that South Africans are great when it comes to client-facing work, when it comes to problem-solving ability, and it is still at a fraction of a cost of what you would pay in the UK. We can even look at the unemployment stats. Effectively, depending on how you slice it, it could be 30 to 40% unemployment in South Africa. We're sitting with potentially 9 million people that is unemployed. Even if you take the top 1% or 0.1%, you're still sitting with a great pool of resources that would love to work for an international company. So the pulling power that you've got as an international company coming into South Africa is amazing. Then you also have the fact that when you consider our education, there are great institutions currently in South Africa, universities that stack up with some of the best in the world, the accreditations. Just take finance as an example. SAICA is rated one of the best in the world in terms of its accreditation. So you get highly qualified people at a fraction of a cost. They still live with their families. They don't need to move away from where they, if I live in Cape Town, my family is probably in Cape Town. The decision to move abroad into a new environment, that in itself is a massive potential problem. Yeah. So all of a sudden, you've got this ability to live locally, but to earn globally. And that is amazing power that a future employer can have over employees in terms of getting the right fit, the right person, keeping them home where they feel home is, and being able to utilize those resources at a lower cost base, but also at scale.
Wow. So to just simplify it for me, there's 2 scenarios that these people will fall into. And so the one is like this severe paralysis of being stuck. And then there's another one where people are trying to do this DIY situation.
Yes,
right?
DIY expansion effectively.
So there's this term, EOR. Can you just talk to me about an EOR, just to explain that to some of the people that might be listening right now?
Yes. So effectively, since COVID, it's really been, the EOR industry exploded. EOR stands for Employer of Record. And effectively what it gives you is a very good solution that's easily implementable to build a team from 1 to 10 employees in any jurisdiction. So what we've seen is we already have the international companies, and these aren't necessarily global listed entities. These are privately owned companies that understand that since COVID, you can have an international team. You can have your resources in a jurisdiction where you find the best talent independent of where you are based as a company. So a lot of the companies, they're already on an employer of record. It's price per person, and it becomes quite expensive at scale. It's a great solution for the first 6 months, 12 months. But when you start building a proper team, you want to go from 10 to 50 to 100 employees, that solution is just not suitable for your ambition and what you want to do. And you are most probably looking at a more permanent home for your employees. And this is when they start running into problems. They need to set up an entity. They need to have bank accounts. They need to transfer these employees across into the new entity. And there's a lot of headaches that they were never aware of with an EOR, because it's a great solution for the right client. But as they transition into a new season, they need a new solution. And that's where we come in.
That's amazing. So we've drawn now the parallels between what's happening internationally and with what's happening in South Africa. And now we can understand why there would be a movement towards the possibility of expanding into South Africa. But now, what is it exactly that Finovate does that's unique and that's different to maybe other people that have picked this thing up? Is there like a unique thing that Finovate does?
Yes. So what we've seen in the market is you get the big four. You get EY, PwC, Deloitte, KPMG. They have solutions in place for this. But it will be a big team, and they're like ICP, their ideal customer persona, would be the bigger listed companies, which theoretically, traditionally has been the only global companies that have even embarked on a journey of trying to build teams and businesses cross-border. But since COVID, there's massive disruption in this industry. You can actually, without incurring too many costs, build a proper team in another jurisdiction. And so on the one side, you've got these bigger companies. On the other side, you have consultants, amazing cross-border transfer pricing consultants. You've got the likes of consulting groups can help you with the potential structure. They can help you with agreements. But who's your implementation partner? Who's actually executing on the ground and making sure that whatever gets decided gets implemented day to day, month to month, year to year? There's a problem there. And then thirdly, you get traditional accounting firms where they might have the resources to help you set up an entity, which is really easy in South Africa, but they don't know and understand the exact and specific needs of these international clients. It's not their ideal client. They are used to working with South African clients, for instance. And these cross-border clients, there's a lot of complexity when it comes to them. Just issuing shares needs to go through the Reserve Bank. There needs to be endorsement of shares. And that in itself can become such a big problem that you literally cannot sell that company unless you've got a valid share certificate. It sounds very simple, but we've run into problems like that with our clients when we onboarded them. And it's one of the questions that we ask on our diagnostic. Like, do you have a share certificate that has been endorsed? Mostly the answer is no.
So this is quite a massive transition that needs to take place, I can imagine. And you guys have developed this diagnostic similar to your fractional finance.
Yes.
But can you just expand on some of the questions that someone can expect doing that diagnostic, and why that diagnostic tool is also, once again, just so helpful for anyone that's looking to expand?
Yes. So we've tried to break down it is a complex solution. There's multiple components, and I think you mentioned it. I built it, but it wasn't. I think I'm more the person that maybe like puts together all the different pieces. But I'm working with specialists and different people and professionals that's already within our company that has very unique and specialized skills that in some way I'm just stitching together. And so how we've structured it would be different phases. Phase one is, what if we can just give you a entity, a business in a box that already has all the necessary registrations in place and the compliance in place and a bank account in place? It's effectively a dormant company that you can buy, but that is ready for the exact purpose that you need. Now, we do have that at stock. It's almost like buying an iPhone. Like when you put in your order, there's already an iPhone. So phase one is this pre-built entity that we've curated that's exactly to your needs, because it's a very specific need that we're addressing. That saves about 3 months. That in itself saves about 3 to 4 months. The second phase is now this entity needs to be transferred into the structure and the systems that you are using. So there's a lot of collaboration needed with your local, let's say it's a UK company, with their tax attorneys, with their finance team, with their HR team, to make sure that the contracts and the MOI and the different service level agreements between the entities, that it's all structured exactly to the need of the client. Now, once again, we've pre-built this. We've got our pre-built agreements, but like any good consultant, that only takes you 80 to 90%. That last 10 to 20% is critical to understand the client's specific needs and to put that in on the contracts. We're talking about IP. We're talking about transfer pricing policies and how that it needs to be arm's length. We're talking about understanding the differences and the nuances with labor law in the US or the UK compared to South Africa. How do you protect your staff? How do you protect the company? So these type of agreements and selling the shares, how does the company get funded? These things are all addressed in the second phase. In the third phase, for us, it's super important. Ultimately, you've got people employed in this business, and we need to make sure that they are onboarded, either from their employer of record that they're already on, or just the new employees, that process works and that the money flowing from the international company, let's take UK as an example, pounds or sterling being converted into rands through a FX service provider, coming through the Reserve Bank, needing the right, it needs the right approvals to physically enter South Africa. That's how the Reserve Bank works, flowing back into your bank account, which is almost impossible to set up without assistance. How that goes all the way through to the employee being paid and other service providers. Maybe you want an office in South Africa. So that whole solution needs to be built. It is pre-built. We've got the steps, and it's pretty much about we build it on a smart sheet, and it's got more than 200 lines of different little, it's almost like a project planner, and little steps that is curated specifically for your need. And we go through that like a good engineering company, project managing it all the way through to ensure that that's a seamless journey from a client perspective. And then the fourth phase is, okay, great. You've set up your entity. You've got everything in place. But who's on the ground ensuring that compliance gets maintained? Who makes sure that it keeps on running and it's smooth and new employees come in and you adhere to all the little complexities and red tape of South Africa on a finance level, on an HR level, on a labor law level, on a legal level, and specifically on a payroll level. So all of these things are also packaged as a retainer.
It's so cool. It is a pre-built package that is readily available. And I'm going to read something, and then I just want you to comment on, because this is quite a bold claim. This is quite something.
Yes.
You guys are the only partner that owns the full transition from pre-built entity to live payroll, all under one roof in under 2 months with one single point of accountability.
Yes.
That's quite something.
So that's our guarantee. And yes, like any guarantee, there are T's and C's, but we've seen, and this is with feedback from our clients, that the alternative is a 9. I think if you Google it or you ask Claude, you would probably find that on average it takes about 9 months to set up, and it takes physically people from the US or the UK to come to South Africa to sign documents for opening up a bank account. They can't get it because they need to come back. It might be multiple flights. So we've seen the whole process going from 9 months to less than 2 months. That is because of the way we've structured it. And that is our guarantee. So we've seen it from 9 months to less than 2 months. And because of this process that normally takes about 9 months, that now is less than 2 months, we've seen a saving of 200 hours of management time or consultant's time. Now, if you just use a little bit of logic and math, what if it cost you £100 per hour? Let's call it $120 per hour. Just the saving in itself is about £10,000, maybe $12,000. It's your own time. It's strategic time that gets wasted because there is not necessarily a partner that takes you on this journey and that is your strategic professional partner to build a business in South Africa. That is our solution.
It's very cool. It's very, very cool for me to see. I'm trying to think about some of the other problems, and let's say someone agrees to joining with you guys. You've also mentioned here that banking can be a massive problem as well.
Yes.
Like, can it really be as big as a deal as what we've spoken about now, banking?
Yes. So think of it this way. Because South Africa was grey listed, there's a lot of, they had to up the game in terms of compliance and what needs to get asked in order to ensure that any new client that comes on the South African platform or banking institution, that everything gets checked before they are onboarded. Now we're talking about, in South Africa, you also get UBO, Ultimate Beneficial Ownership submissions that need to be driven through CIPC. And on SARS side, which is from a tax point of view, or regulatory body, they all start working together. And there's information being shared between them. That all needs to stack up. But banks, traditional banks, let's call it the bigger banks, FNB, your ABSA, they aren't used to understanding the complexity of an international structure. The teams you're working with, your normal banker, they don't have the skill set to assist you and to ask for the right information. So you think you're going to open up a bank account, and by the time you get asked all these questions, you realize that it either takes 9 months or you don't even have the answers that they need. And so what we've done is we're working with Investec on this, and we're working with a specific FX service provider called Kuda that helps you to actually reduce this journey. We set it up pre-built within an entity, and we take you on this journey to ensure that you stay compliant. And we already ask these questions and we build in the solution as part of the onboarding phase. So once again, it's not as if the red tape is gone. It's not a magic fix. It's just structuring it in a way that saves a lot of time and working with the right strategic partners that really understands the needs.
That is incredible. I can't wait to hear some of the success stories that you may have had, because it sounds like there's been a ton of them. But I just want to ask before we get there, this is quite the task to undertake, to try and figure this out from scratch. How can we alleviate this problem? So I just want to know, out of a curiosity, like, how did you know that this was a problem that needs to be fixed? And then how long did it take you to develop the solution?
The solution. So where did we pick up the problem? It's, in some ways, it was about 5 years ago when we actually expanded from South Africa to the UK. And we almost saw the inverse of it. We realized the frustration and the complexity of trying to go abroad. And in hindsight, we thought, like most companies, we'll just DIY it. It's super easy. It's easy to set up an entity, and we work through Companies House, HMRC. It cannot be that difficult. And then we started to incur these additional costs. We had to get a local director. All of a sudden, there's a few grand gone per month. Now we needed an address. Now we ran into problems about what does the transfer pricing policy need to look like. And you get quotes varying from a few thousand to hundreds of thousands to millions of putting certain elements in place. But where do you draw the line? What is actually sufficient for the size and the scale of your business? Because a lot of these service providers, they work with bigger multi-global companies. And we're this little fish in the pond that just has no idea how to almost navigate all the different consultants. It burnt a lot of time. We even had our bank accounts frozen. And so effectively, we realized the pain of doing it ourselves inversely into another jurisdiction. But what we also then realize is, because we've already done it the other way around, and we've got the expertise on the ground in South Africa, this is actually potentially a great solution for other international companies wanting to do business in South Africa. And that is kind of where the journey started. I think about 5 years. That's the amount of time it took. But there's obviously accumulation of different skills that we already had in place for the last 10 years that led to us being able to build out this solution.
That is incredible. Yeah, it's often the times where you burn your hand on the stove a couple times when you realize and you learn, okay, guys, this is how we're going to reframe and restructure everything. So that is so cool that you've got that personal experience of all of those headaches that you had to endure going to the UK, and now you guys are like, well, let's use this. Now it's our tool. That's brilliant. So
yes, then really understanding the pain points of the founder or that business owner And we're working with, in this solution, we're actually working with bigger companies. It's not as, I thought actually that there would be a great solution in place for bigger multi-global companies, but they don't. They might have great consultants and they might have great maybe attorneys or maybe legal teams that help them. And the big frustration that they had is when it comes to actually executing it on the ground, who do they need to go to? Do they need to employ a CFO in South Africa that costs them a few million or million a year just to oversee this? But what about the basic things that need to be in place? And so it was more an execution problem that they ran into that we were able to solve, to say, if we cannot have almost a one-stop shop, a full journey, a full product, working with partners, if we cannot solve the whole equation, there's always going to be a little bit of a frustration from a client point of view, saying that you're only taking me to, it's almost like halfway through the river, but then I'm still drowning. Like, you have to take them from land to land on the other side. Otherwise they're just going to drown in the river.
No, look, I can imagine if I'm on that side and I'm having to cross the river, and I had to walk into someone and into a company like you guys that say, you know what, we're going to get this raft and we're going to ensure that you go all the way across, and also give me all of the floaties, all of the safety equipment, and make sure that this is actually a foolproof process, actually.
Yes.
So I'm sure over the last 5 years, you have a couple of testimonies and some cool stories that you can share. Maybe one or two client stories that you maybe want to share.
Yes.
Because this is genuinely a blessing. Like, this would help so many people.
Yes. So I'll share one story. So, well, I've got a couple, but the one I'm thinking of now is we had a US client that wanted to build a team in South Africa. They were on an employee of record, and they realized that at scale, they needed a permanent home for their employees. The other reason they had is strategically, they knew that they're busy building a company that wants to be acquired by a bigger international consulting firm. Not going to name names, but it's one of the biggest ones in the world. And so they wanted to do it right, because they knew the value of their business is going to be linked to actually how they implement this. So for them, it was an interesting thing. It was as if they made an investment into their own valuation, which is what we love to see. It's like value unlocked, like the podcast itself. So they realized that it's a fraction of the cost. They told me that our whole process was effectively what they budgeted for as a consultation session with some of their legal team just in the US, just to figure out what should they do. It's not even executing it. So, and they were actually sharing that while we were on the call with them.
Yeah.
So they literally said, keep an X amount of budget, just keep that almost like to the side, so that we can review what this whole process looks like. So for me, that was a funny story and a good, and now what happened is they did get acquired, and the acquirer actually looked at our whole process. And because everything is structured and it's saved, it's almost like having all the documents in one place on a smart sheet that we use with references to all the specific supporting documents. The actual due diligence on the South African side was the smoothest of everything. It was easier than doing the US due diligence, because everything was packaged neatly with the idea that it needs to be investment ready. It needs to be a track record, something that is structured and something that anyone can access, or not anyone, the right people can access, and have all their agreements, everything under one roof, which just, once again, saves a lot of time, complexity, and knowing that you're ticking the right boxes.
That's incredible. If you have another story, then I would love to hear it. But maybe just to sort of interject, I'm kind of picturing, a company that may be in such a bad place. I don't know if you've ever worked with a company that is in such a bad place where there's actually like a disruption to payroll, and they've kind of come in and asked you guys to almost rescue them.
Yes.
Have you have stories like that where you've literally physically rescued someone out of like the darkest, deepest pit possible?
Yes. So this one it's actually a UK based company, and so what they do find is they wanted to do a DIY. So they didn't go through an employer of record. If you go through the employer of record route, then most things would be in place already in terms of at least taking care of the employee itself. But if you try and DIY it, there's different elements that obviously that you're not aware of. So they did the typical thing that a lot of international companies are doing currently, and they put all their South African staff on an independent contractor agreement. And this is very common for international companies to do, because in other jurisdictions, it's legal to do it. You can do it. But in South Africa, it's not. And it's not that it's not. It depends on how you interpret the labor law. So and also understand that from a SARS, from a tax regulatory point of view, if the South African, the employee, let's call it as such, if that person works at least 80% of the time on this one entity, in most cases, they are fully employed effectively by the international company, but they don't know how to structure it. So they just say, send me an invoice and I'll pay you. But the person, in all practical purposes, the person is fully employed by the international employer. Now, the problem with that is they don't even realize that SARS can legally ask them to pay over the pay-as-you-earn on behalf of the employees. They don't have a tax number. They don't have a South African entity. So physically, they won't even be able to do it. But they're not even aware of this problem. Now, this problem was like, we did a calculation with one of our clients. The reason they wanted to move was not because of this. They actually wanted to move because their employees wanted some permanent contract. Yeah. And the reason for that is they want to buy a house. It's just a normal need. People need some security. And the independent contract wasn't good enough for them or for the bank to give them a loan. So the people wanted more security. So they wanted to move across. But what they didn't realize is they had probably between a 3 to 5 million rand potential SARS problem, that if they stayed and remained on this structure, that there's a good chance that it could have realized. And so we were able to mitigate and take away that pain point of a SARS problem that lingers somewhere and you don't see it until it hits you. And we know today that in South Africa, SARS is busy picking up on these, let's call it's definitely not malicious. It's not malicious, but these consequences of somebody not knowing and interpreting the act and then sitting with some problems down the line. And so we were able to solve that 3 to 5 million problem with, once again, a very small amount that they had to pay up front, and then structuring it in a way that now gives them the peace of mind to run legally, and employees are happy, but SARS is also happy. The Reserve Bank's happy. The banking, the funding, it comes through the right channels. And the last thing we want to do is have a structure that's so complex that it just eats up all the gains that you're doing for doing the expansion itself. But what you also don't want to do is you don't want hidden problems, almost like unrealized liabilities sitting on your group entity because of ignorance or potentially just not knowing and nobody asking you the right questions.
Yeah. And so I'm guessing you guys are obviously very upfront and you guys know the legislation, of course. You know some of the regulatory needs. And
yes,
there's this thing called the Section 197 transfer process. Can you just quickly just touch on that just so that I can understand what that is?
Yeah, so what we've also seen is now, and this is similar to a 2P in the UK, but if you've already got your employees on an employer of record or another platform, you need to, in order to put them on the new entity, you need to transfer them. So the Section 197 is the act that gives you what are the legal requirements needed to transfer employees from one entity to another. And in layman's terms, once again, my background is finance, but obviously I understand a little bit of everything. But the terms of and the conditions of that contract needs to be at least similar to what it was in the prior arrangement, in the prior entity. And so we are in-house labor law team takes the clients and the employees on this journey to ensure that when they transfer and they move across, They get notified. They understand what this restructure is all about. And it is really to their benefit. So I think the clients that we love working with are the people that really, they want the best for their employees. They're not in it just for being exploitative. So you do get companies that just want to exploit and pay minimum for South Africans. What we find that really works and where the clients and the employees are most satisfied is when you pay a little bit above market related in South Africa and you actually incentivize the people to stay longer and you put them under a roof and under a structure where they can see long-term value. So all of this is possible, but yeah, 197, it's the transfer of the employees from one entity to the other.
And you talk about all these things that are possible, and I'm thinking about Finovate as a whole now and where you guys are forecasting and where you guys are headed.
Yes.
What, after discovering this amazing tool and after seeing all of the great successes so far, what are some of the other ambitions that you have going forward for yourselves, but also for the clients and the partners that you guys have?
Yeah, so currently what we're working with some of our clients is almost challenging the status quo of like, how big should the South African team be? So we've got some of our clients that have got massive global companies. They've got thousands of people sitting in global offices. And we're just challenging them to say, but what if you, let's say, a Cape Town office can also become one of these strategic hubs? What could it look like if you build a team of 100 to 500 to 1,000 people in an office strategically in Cape Town? Now, we've seen the likes of, let's say, AWS that has done it. But what are the strategic value of actually building such a big team in South Africa? And so the EOR solution is not going to get you there. And one of the biggest concerns and constraints is they're not the structure. It's not the fact that the finances can't be adhered to, or that there's compliance issues. The actual constraint then is, what are the strategic recruitment partners? How do you build this team? What are the cultural constraints? So currently we're working with them and we're working with strategic partners on our side. We don't want to control the whole landscape. We're not going to promise every single company that we'll physically recruit them the best employees. But what we can do is we know we're working with strong recruitment partners that specialize in building teams in South Africa for international clients. And so that partnership, I'm really excited about. It's saying like we can hold hands with other companies that does something that adds and unlocks a lot of value. And we can focus on our core, go deeper, and at the same time, keep working and building a bigger, almost like a distribution network. So we're talking about recruitment. We're talking about offices, office space. We're building networks with insurance companies, understanding how can we mitigate and reduce risk. We've got the banking partners. And so there are these additional elements that I think really gives this complete one-stop solution. And we don't have to solve all of it. We want to partner with the right people that understand a certain landscape, transfer pricing specialists, IP specialists, some legal teams. And that, I think, is where the real magic sits, is actually cohesively bringing them all together to really serve the needs of the client.
Wow, that is very, very exciting to hear. And what I do know about Finovate is that you guys are experts at identifying talent, identifying potential, and then partnering that with the right roles and responsibilities. So I can't wait to see what's next for you guys. It's very incredible. So Francois, to someone that's listening to this, to someone that is watching this, and they're identifying with everything that you've said, and they might be in the exact position that maybe that company in the UK was, or maybe the company in the US. Maybe there's a founder out there that is like, this is exactly what I've been hoping for. What is the next step? Where do they go? What's next for them?
Yes. So what we've done is on our website, we've got a page that is specifically for the inward expansion solution. And on that page, there is a diagnostic. For me, the best would be to actually go and do the diagnostic. It's going to take you 3 to 5 minutes and you just complete it. It asks 20 to 25 questions. The questions that get asked there are effectively some of the things that we discussed here. And it'll give you a very good, it's like a health score of in your journey of expanding into South Africa. Where are you currently? But what it does give us on the back end, it gives us we can almost pinpoint where you are, and we can ensure that when you engage with us on a discovery call and a technical meeting, which we always have, that we can really pinpoint your exact position where you are now, and we can help you to actually in that session already to show you the solution of what needs to be in place based on that diagnostic. So that is the easiest way of going about it, and you can find that on effectively, I would go to www.finovate.co.za.
Francois, that is fantastic. Thank you so much again for sharing your wisdom. That was extremely valuable. I'm so thankful to be in these conversations, and I'm sure that the people out there, the people that are facing these current problems and these current headaches, are also going to value everything that you've shared. So thanks again for being here.
It's always a pleasure.
So if you would like to take the Inward Expansion Readiness Questionnaire, or maybe you want to book a discovery call with the Finovate team, head to finovate.co.za. All the links are going to be in the description below. And we're excited to see you on the next episode. Thanks again for joining.